Interactive Investor sticks by Nick Train after liquidity review. Interactive Investor has stuck by Lindsell Train UK Equity on its Super 60 after a review of liquidity in Nick Train's fund prompted by two research house downgrades.The D2C platform's investment committee placed the fund under review in November 2019. As a result, and because of the highly concentrated nature of the fund and a recent downgrade by two independent external agencies, we wanted to reassure ourselves that there has been no deterioration in liquidity, said Head of Funds Research Dzmitry Lipski.Interactive Investor. Looked at liquidity, capacity and concentration in the fund, plus spoke to Train at length, before concluding it would remain on the Super 60, said Lipski. The majority of the holdings are large, liquid companies with diversified revenue streams. In terms of capacity, there is plenty of room for further growth without compromising the mandate. Interactive Investor's conclusion differs from Square Mile and Morningstar. In November, days before Interactive Investor put Lindsell Train UK Equity under review, Square Mile demoted the fund from the highest possible AAA rating to an A rating. At Christmastime, Morningstar downgraded the fund from gold to bronze. No changes to Interactive Investor Super 60 since launch. The continuation of Lindsell Train UK Equity as a Super 60 constituent means the buy list hasn't had any changes since launch a year ago, in contrast to the Wealth 50, which has dropped 7 changes since it was unveiled in its revamped form in January 2019. Lindsell Train UK Equity was one of only 2 open-ended Super 60 funds that were most popular with Interactive Investor users during the first year of the buy list. The other was Fundsmith Equity.Unlike Hargreaves Lansdown, which says investment trusts are not liquid enough to handle the Wealth 50. Interactive Investors includes investment trusts on the Super 60. Interactive Investor Head of Personal Finance Moira O'Neill described the buy list as instrument agnostic and questioned why rivals, like Hargreaves Lansdown, are not. O'Neill said, "What this data shows is that whilst investment trusts might be the Cinderellas of the investment world, seldom invited onto rated lists and rarely recommended by financial advisors, they are the natural home of self-directing private investors. So, the question of why they are so underrepresented on most platform-rated lists and model portfolios remains to be answered." Investment trusts featured among the best and worst performers in the buy list on an absolute basis over the last year. The Henderson Smaller Companies Trust was up 46% over the period, followed by the TR Property Trust, which rose 41%. But BlackRock Frontiers was among the worst performers during the period, gaining 4%. Man GLG Continental European Growth was the best performing open-ended fund over the. For more on this story, visit the news article link.